Studio 12-intervju. Dagens gäst, Mark Mobius, Templeton Emerging Market.
Dr. Mobius, you've been an emerging market investor and an expert for almost half a decade. I am so pleased to have you as our guest. Welcome.
Thank you very much.
I thought we could go through the emerging markets country by country, but first I would like to spend a little bit of time on your early resume. You were born, I'm intrigued by it. You were born by German, Puerto Rican parents in New York.
Yes.
And then you studied art, journalism, and also social psychology.
That's right, yes.
How important has that been for your success as an investor?
It's been very, very important because, you know, a lot of the matter of investing is about psychology, about social psychology, the behavior of people, because in many ways the reason why a stock goes up or down is because it's become popular or less popular. And so it's a very key aspect. Another important aspect of my education was, of course, in economics. I ended up developmental economics at MIT. And that was also important to learn about what was happening to the economies of the emerging markets world. In those days, it was called the less developed world. Now it's called it changed a lot. And that really led me into what I'm doing today. The other thing, of course, is I'm interested in everything. I'm a professional student. So that was also helpful because, you know, we're covering so many different industries and so many different places.
We're going to talk a bit about the regions, but you do a lot of stock picking, don't you?
Yes, we're very much oriented towards individual stocks. And the reason for that is that you can have a macroeconomic environment that will have a completely different impact on individual companies depending on what is happening at that various time. For example, let's say economy has a currency that is declining, that is getting weaker. Well, in that case, exporters will probably do better because their costs will be lower because they'll be buying in local currency and they'll be getting a stronger currency, US dollar or euro, for their sales. So it's this kind of thing that we have to look at, and it's important to start with the company, but not to ignore the macroeconomic situation.
So when looking at stocks, you could say that in emerging markets it's been important with the rising GDP for many of these countries, but that doesn't always coincide with the rising stock market. How would you talk about that relation?
That's right. A lot of people say, gee, you know, there's no relationship between economic growth and the stock market. And what they miss is that they don't coincide. In other words, the stock market is usually a leading indicator because company presidents, company officials, and people who are looking at companies realize that the earnings are looking better. And that doesn't show up into the economic statistics until maybe a year later. So very often you see this difference, stock market going down, but the economy is getting better. And that's because of the timing differences. But there's no question that if an economy is growing fast, there's chances that their companies in that economy will also be growing fast.
Can you still talk about emerging markets as one theme? There are more differences than similarities today, aren't there?
No question. Emerging markets are very, very different. I mean, you go to India, it's one thing. Russia is another thing. Brazil is another thing. China is different. Turkey is different from South Africa. The differences are incredible. Now, sometimes the markets will move together because of the global economic situation. You have a 9/11 or a global economic crisis. It affects markets, all markets, temporarily. It won't last very long because they will then start going their own way. So you have to be very careful about that, not to draw the conclusion that markets will all move together at the same time.
Where do you find the most interesting investment opportunities at this point?
At this point, if you speak generally, I would say frontier markets, so-called frontier markets. Markets in Africa, some markets in Eastern Europe, a few markets in Latin America, like Colombia, Peru, and so forth. And then in Asia, of course.
You started out with Africa. Isn't it hard to invest in Africa? There are a lot of problems with corruption and
It's hard everywhere, and there's corruption everywhere. You'll find corruption in every country. The difference in these African countries and in frontier markets generally is that the rule of law has not been well developed. So, for example, if you're investing in a company and they do something against you as a minority investor, it's very difficult for you to get redress in the courts because the courts are not working well. So it's very important, therefore, for you to do your homework, to do a lot of research, which is why I'm traveling most of the time, to talk to people on the ground, find out what kind of reputation people have, and so forth, to make sure you're dealing with the right people. But it's really not that much different than investing in developed markets.
But you have, like in Africa, human rights issues, or even in China. How do you look upon CSR and ESG when you do investments in those countries?
We have to look at the ESG and all of these other factors when looking at individual companies. So, for example, let's say in Vietnam, we were thinking of investing in a company that does forestry. Well, we then learned that they were going into Laos and Cambodia, the neighboring countries, and cutting down forests illegally. Of course, we didn't want to invest in that kind of company. So we do take that into consideration because at the end of the day, it is going to affect the company if the government or other people object, and that would have a detrimental effect on the price as well.
But there aren't markets that you wouldn't even enter because of these factors.
No, because each market, even markets
the worst
that look,
markets,
the worst markets, you'll find a good company that's performing well. Now, when we will not invest in a country is two things. If the country says that they're going to take over companies, they're going to nationalize. Of course, we don't want to be there when that happens. And secondly, if they restrict foreign exchange flows so that we can't get money out. So, for example, in Venezuela, when Chavez came into power, we got out quickly because we realized that he was going to do those two things.
During your years as an investor, emerging markets and free trade has lifted emerging markets a lot. And as you said, you don't have currency restrictions in the same manner anymore. But my perception today is that there's an increased amount of protectionism from countries in emerging markets like India or Indonesia. Is that something you would agree with?
No, actually, as a result of the World Trade Organization, trade barriers have really been coming down, not going up. And that's true of India. It's true of most countries around the world. World trade has exploded. The volume has exploded. Now, it doesn't mean that there are not restrictions, of course. There are restrictions, even between, let's say, U.S. and Japan. I mean, these are developed countries, but yet the U.S. cannot export rice to Japan very easily because rice is so important to the Japanese economy. So you're finding these restrictions, but they're the exception rather than the rule, I would say. The whole trend is towards opening up.
Is that of course, it has come down a lot.
Yeah.
But that you can see voices that are raised for more protectionism, like now when the U.S. is tapering, it affects the emerging markets, and they're saying we should try to put a stop to the effects in some way, with some types of barriers, perhaps. Would you say that there even is an effect for emerging markets from U.S. tapering?
There is an effect insofar as there's psychological impact on investors who say, let's say they were in fixed income investments in emerging markets, high interest rates, big gap between emerging market interest rates and U.S. rates. When they talk about tapering, they say, God, interest rates are going up, I better get out. So you have that effect. But when you get to trade and investment, by and large, countries are becoming much more open. Not necessarily in doing multilateral deals, but doing unilateral deals. So China and Russia will sit down together and say, look, let's cut the tariff on gas, or let's do a deal on gas. Or Brazil and Argentina will do a deal on a certain commodity. And so generally speaking, there's more people in favor of free trade because they see the effect has been very positive for most economies around the world.
Do you have any example of where foreign investment hasn't been good for a country. Like there has been debate in Sweden, for example, that when multi-billion companies come to Africa and they want to exploit their natural resources, it might not end up as very good for the company, as good as it could have been.
Oh, there are many, many examples like that where, particularly in the natural resources area, where, you know, a company comes in and they denude a forest to get at a mine, or an oil company has an oil spill and it creates a big problem. There are many examples like that. But more and more companies are becoming aware.
As an investor?
Avoid it. We avoid companies that are going to get into this kind of trouble, because we have to be very careful for our own reputation as well. But sometimes they're unexpected. You know, you'll find a situation where you have a company, they've been doing very well, and they're in a country, and suddenly they have an accident, an oil spill or something like that. Then you may have to look forward to compensation to the country and to the people affected. So we have to try to avoid that if we can, but sometimes it's unavoidable.
Today, actually, it's 25 years since the Tiananmen Square massacre. Given the positive developments in China, and I'm not saying, I guess, you can never justify killing, of course, but was it in some way right to clamp down hard on the protests, or how should we see the regime in China?
I think on hindsight, there are probably a lot of leaders in China now who regret that happened the way it did. It could have been handled in a different way. But at the time, that was a decision that was made. There was fear that the whole society would disintegrate, and the order and law and order would disintegrate, particularly in the capital city. But it probably could have been handled in a different way. Do
you think China would have been in the same position today?
Today, I think China would have been in the same position, yes. Because they were moving towards more liberal society. And they continue to move in that direction. If you look at the 10 points of the reform program for this next 5-year plan, economic plan, you see they are moving inexorably towards liberalization. So that is going to be very important for the country going forward.
They're also moving towards more sustainable growth. Do you think they will succeed in that?
Well, they've already had terrific growth. As you know, they've had anywhere between 7 and 12% growth over the last 20 years.
But now it feels like that they're pushing down growth to make it more sustainable. A bit lower, but more sustainable.
Right. I don't think it's necessarily an effort to push down the growth. It's more the fact that the economy is so much larger that it's very difficult to justify and execute 10, 12% growth. But you must remember that the dollar value is still growing. You know, a 10% growth in 2010 added about $800 billion to the economy. In 2013, 7% growth added $900 billion to the economy, because the base is getting much larger. So you must realize that China is still growing at a terrific pace.
So how do you look upon the problems that they have? People are talking about a real estate bubble. Do you see a risk of that, or that GDP figures are rigged and that unemployment is high, rising?
Unemployment we don't see rising, because what's happening is that their unemployment in the export-oriented areas is rising, but in the domestic-oriented economies and industries it's growing. So you're seeing a transition from export orientation towards local economy. That's one thing. Then if you look at the whole structure of the economy, you can see they're moving more and more towards higher value-added products, you know, high-tech products, less garments, less shoes, and more machinery, electronics, telecoms equipment. Now one of the largest telecom equipment companies in the world is a Chinese company, Huawei. So you're seeing a transformation of the economy. And I think as regards to the real estate, so-called real estate bubble, there's no question. It's a big country. It's 1 billion people, many provinces, some places building was overdone, you have a goat city. Other places there's a shortage of housing. So if you go to any of the big cities, you see property prices continue to creep upwards. Government is trying to control that, but if they want to move towards an open economy, they can't put too many controls. They got to allow the market to regulate what's happening.
There are stuff happening all over the world. We have a military coup in Thailand. Last time, it wasn't that good for the economy. How would you say it will play out this time?
Well, once the coup took place, the stock market went up. Because the stock market likes stability. They don't want uncertainty. The coup gives a measure of stability and certainty to the situation. Now, if it goes on for too long, and if the army in Thailand is not able to accommodate the views of the red shirts as well as the yellow shirts, you know, the monarchists in the yellow shirts and the red shirts are the people who want more democracy, then they will have a problem. But that remains to be seen. The picture has not really been played out completely yet.
Another area which I wanted to ask you about is Russia and Ukraine. That situation, how do you think it will play out?
I think what will happen is that Russia and the European Union will come to an accommodation on how to neutralize Ukraine and make it into more of a federal state where there is a lot of autonomy for the eastern regions. I think that's probably the solution they will arrive at. But it won't happen overnight because you have a lot of radicals, you know, both sides. You know, the Ukraine nationalists and the Russian nationalists, and they probably will cause problems. But in the long run, that'll work out well, I think.
So if you're interested in Russia, you can go and buy Russian stocks now.
Yeah, Russian stocks are down, the ruble is down, so there's probably some opportunity down in Russia.
Your focus is, of course, emerging markets, but can you say anything about Europe? And especially, people are talking about Europe, or even Paul Krugman said that Sweden is like the new Japan, and disinflation is a problem both for Sweden and for Europe. What do you see there? Is it a Japan scenario that we're in front of?
No, because you see the way that Japanese were able to get away with what happened was the savings rate is so high. Now, it's true, savings rate is high in Sweden, but not like Japan. And the faith in the Japanese government bonds is so high that people are willing to put their money in banks and allow the banks to buy the government bonds and get crazy low interest rates, and they're still happy. This is not the case here. So I think you have a different situation. And of course, you're here tied into Europe much closer than Japan would be tied into any other economy, except the U.S.
So how much of a problem is disinflation for Sweden and the region here? What will...
I'm in deep disagreement to a lot of these economists who see inflation as a good thing. I don't see inflation as a good thing, particularly if you consider the aging population in Europe, because more and more of these people are depending on their savings and on their pensions. And if you have inflation, it places a lot of hardship on these people, which necessitates higher government spending to support these people, which necessitates a bigger government, which necessitates more waste and bureaucracy. So for some reason, this idea of, that inflation is good is, I think, a wrong idea. Because if you have high productivity, your inflation rate should actually go down. Productivity is the enemy of inflation. And we all want higher productivity because it means we have a more efficient society and we have good economic growth. So I think for some reason these economists have got it all wrong in my view.
So it's quite good, like it is now then?
Oh yeah, It's good. And if you look at Japan, the lifestyle in Japan is very nice. Very low inflation. It's very good.
You're often out kicking the tires. Have you kicked any tires when in Sweden? Or
Yes, in fact, yesterday I visited Oriflame, your company here. Because Oriflame is an emerging market company, so we wanted to find out what was going on, and their stock is down, very low now.
Mm-hmm.
I'm not recommending it, but I'm just saying that it's worth,
It could be an opportunity.
Could be an opportunity.
I often get the advice to invest in companies, like invest in Oriflame if you want exposure to Russia. What do you say about that type of
I think it's a
strategy?
great idea. I think if a company has over 50% of its earnings or profits in emerging countries, you should be investing and looking at that. If they're well run, a reputable company, and Oriflame would be a good example of that. But there are many others in the developed markets that are actually emerging market companies. So we are always on the lookout for these companies.
So you've actually kicked some tires in Sweden.
Yes,
That was
yeah,
nice
it was
to
good.
hear.
We're keeping our eyes open to see what else there is.
Thank you very much for coming here.
Thank you.